AFIC is a listed investment company that holds a portfolio of diversified companies. We invest in businesses that we select from the Australian and New Zealand share market. And AFIC holds quite a unique position in the Australian investment landscape. It's been around for over 90 years, so there's a long track record of managing investments on behalf of our shareholders. The closed-end nature of a listed investment companies means we can take truly a long-term view of our investments, and we don't have to worry about funds flowing in and out of the portfolio as investor sentiment changes. The objective of AFIC is to grow our dividends to our investors at a faster rate than inflation. We understand the importance of fully franked dividends to our investors, but we're also interested in total return, and with that comes capital growth. So the combination of capital growth and growth in dividends, we think can provide our investors with attractive returns for the long term. Well, as a long-term investor, we are seeking to therefore be in quality companies. So that's businesses that we think have a long-term sustainable competitive advantage. We find the outcome of that is that we will end up being in companies that have superior long-term earnings and therefore dividend growth. And it also means we can hold those businesses for very long periods of time. Therefore, we generate low turnover and we are very, very tax efficient for our investors. We're seeking to invest in quality companies. Now, some of the attributes we look for is businesses that we think have a sustainable competitive advantage over that long term. We find that companies that do have that sustainable competitive advantage generate superior returns for investors. So some of the features or attributes we look for are businesses that have a unique asset or unique brand in the market, preferably with less competition and therefore generate high margins. We want companies that have very strong balance sheets. We understand that companies that are highly geared can often get into a lot of trouble. We look at the people running the business. We're trying to find great managers and great boards. We have a preference for companies that have more sustainable income streams. And we look for companies that, where possible, can avoid outside influences such as being reliant on economic cycles or commodity prices, and businesses that perhaps are less influence what a government might do, for example. So these are some of the attributes we seek out in our companies. There's some financial metrics we look at. We want businesses that have good return on capital or return on equity, and as I stated, good margins and very strong balance sheet metrics as well. Well, investing in the share market or AFIC always comes with some risk. The share market can be very volatile, but we know as long-term investors, being in the share market can be a very rewarding experience for the patient investors. Investors just have to understand that in any short-term period, markets can move up or down a long way. We try and manage our own internal risk through a number of ways. One is by sticking with quality companies, and we feel that quality companies give you superior returns in the long term. We seek to hold a diversified portfolio, so making sure we spread our investments across a range of businesses, sectors and industries. We also want to make shareholders aware that we do publish our NTA every month, which is our net tangible asset backing, which is essentially the fair value of the fund. Shareholders can then look at that, and the share price can from time to time trade at prices lower or even higher than the NTA, and it's something shareholders have to take into consideration if they're thinking of investing in AFIC. Well, AFIC is a closed-end fund. So essentially we have a fixed number of shares on issue. So we're not constantly raising new money, and nor are we susceptible to money coming out of the fund when perhaps there's periods of uncertainty in the markets. Therefore, we can really concentrate on the investments we're making, and we can truly be a long-term investor, and we're not forced to sell stocks in those periods where shareholders are panicking and looking to take money out of the market. We can actually use those periods of weakness in the market to be buying shares in companies that we like for the long term. AFIC has always been a low turnover portfolio. Therefore, it is a very tax efficient structure, and we understand that paying tax can be a significant drag on the returns that investors can ultimately have when they invest in the share market. We also are a very, very low cost way to get exposure to the Australian share market. Our management expense ratio, or MER, currently stands at about 0.13%. We also don't charge performance fees. Therefore, by investing in AFIC, essentially shareholders get the full benefits of the exposure to our investments at a lower cost and in a very tax efficient manner as well. As an investor in companies, we obviously receive franked dividends from our investments, which we seek to pass through to our investors. From time to time, though, we do realise capital gains. An example would be where there's been a takeover of a stock we hold. Those capital gains come with them what we call LIC credits. So we do get the advantage of having held an investment for more than 12 months. And we will seek to pass those LIC credits to our shareholders as part of their dividend as well. One of the other benefits of being a listed investment company is that we can build up reserves over time. This usually comes through realised capital gains in the portfolio, and we can draw on those capital gains when we have periods where our income is down, often where perhaps we're going through a tougher economic environment, and AFIC has had a track record of doing that in the past. AFIC is a listed investment company, and as such we are listed on the Australian stock market, and we have our own board of directors, many of who sit on our investment committee. Those directors have a wealth of business experience. Many of them have been involved with the management or as a CEO of companies in the past, and many of our directors sit on boards of other companies. They bring a wealth of experience on businesses, markets, economic cycles, outlooks, and that input into our investment process makes us quite unique in the market. So the aggregation of people with a wealth of experience we find is invaluable in terms of our understanding of business and the opportunities that we are seeking from the market. Communication with our shareholders is really important because at the end of the day, the shareholders own the company. We release our NTA every month to the market, and that has information on our top holdings. We obviously report our results every 6 months through our full-year result and half-yearly results. We have AGMs, which we encourage our investors to attend. And for many, many years, we've been travelling to other major cities around Australia doing what we call shareholder information meetings, where shareholders are also invited to attend. And those are great opportunities to come and really talk about the business, about the company, what we've been investing in and why. And our shareholders really enjoy those meetings.